What is going on, everybody? Welcome back to another video, and in this video we are going to show you how you can trade options and puts and still make money in a bear market. So with that being said, let's go ahead, cue the intro, and jump right into this one.
I know I'm fine, but the money makes me.
Okay guys, so if you guys have seen any of my past videos, you guys know I love selling puts. Well, with a bear market, and let's go ahead and pull up the market, it was not a fantastic day today. It came all the way down and it was very red, and then it kind of bounced back, and then post-market here, we've bounced back quite a bit, which is not a bad thing whatsoever. Same with this is a leveraged oil. Oil is still down here. But again, we like to look at all these, and look at them. You can see that it was not a great day whatsoever. So how do you make money off of this? Well, I hate to tell you all, today is the day on these big red days where the market gets down 2.5%, 3%. I'm selling puts into it. Now, what happens if we have a real recession? I have the capital to buy those shares, just so you guys know, and then I will start wheeling it as much as possible, hoping that the market doesn't fall too bad. And that's a main key point, and why I always tell you guys to buy or sell options on the wheel, if you're doing the wheel strategy, on companies that you want to own long term. Nothing is saying that we don't go into a recession. Now, I know nobody likes that word or anything unless you're like me and you're wanting to buy these stocks up. I'm 100% fine with that. I always have a certain section of my portfolio sitting in cash waiting to buy more stocks, because you guys know I love my dividend stocks as well. So the easiest one that I'm going to tell you guys that you guys can do, now I wouldn't suggest going to QQQ or something like that. Go, maybe you guys like PLTR. They are a technology company, so they have been hit, and they are down to 1660, and this is just a cheaper one to get started. But if I was looking, and I would rather be net neutral rather than bearish on the market. So what does that mean? Meaning, I don't care if the market goes up or down, I'm going to profit either way. So, if the market stands still, I'm going to make profit as well. So how do you do that? Well, that's a very, very simple question to do, whether you do it on TQQQ, SPY, QQQ, UPRO, any of those. So I'm just going to show you on QQQQ. For instance, if you already have a put that you have already sold, and it's still, in this case, you're probably not just going out your normal 7 days that a lot of people do, or going out to your 20% profit. You're probably going out to probably like a 90% probability of winning. I think that is the big thing here. So this is your mid price. We're going to switch to a put, and obviously they're winners there already. And now here's the thing. Now normally we'd be collecting a lot more in profit there, but again, you have risk, and right now you'd have a lot more risk. So I would be going to that 85 to 90 range. So right here is probably right where I would want that 370. Now you're only collecting $160. That is the big difference here. But if I'm going to go do something like this, and I am worried about the worst case scenario, I want to own this stock first of all. That's a big thing. I'm fine with owning the NASDAQ, which is basically QQQ. But if I wanted to play the short side as well, which I think a lot of people need to learn, is we are going to go back to calls, and I'm going to go figure out, where am I willing to risk it, and maybe I'm not doing far out of the money or anything like that. I do want to scale this down because I am going to be looking at about that 45-day range, maybe 38-day range on SPY. Let's go to SPY here, and I'm going to go to calls. I want to be looking at selling a call, and obviously as we go up here, you're going to get further and further out of the money, of course, like normal. And again, I'm not selling an 80% on calls. If I'm going to sell my calls, and I do this quite a bit, now here is the key factor though, is you're always doing this as a credit spread. I'm never leaving unlimited risk out there on this one. So I'm going to go to an 85 or 90 again on this one, even if I think it's a bear market. So you're going to see why. Is I'm not going to make near as much on the call side, but I am going to make some if I do get hit on the downside. And I think that's the biggest thing. So I'm willing to risk $2,000. I'm going to make 90 bucks here. And if the market goes up, now I'm probably not honestly making this trade. I'm probably going more up here. And you're going to see that it's still $1,000 and I'm still getting paid $70. These spreads are getting a lot different here after hours, of course. That is the difference. So a lot of times you will see that these are going to be, they're going to move as soon as the market opens. Another pro tip that I tell everybody is I don't get into selling options at the beginning of the trading day. I'm usually actually putting on them at the last hour of the day because I'm hoping to get most of that down move. Like today, I did I think an hour and a half before market closed. I thought it just came down further enough to where I was, and I had some time. I safely put in some put options that I sold, and now I have those positions. And I'm hoping tomorrow, honestly, they should be up if the market opens up just up a little bit. You'll see that the intrinsic value and everything will move on them. I think that's an important thing to do here. And these, why I will stay net neutral in the market and I'm not looking to just sell these calls naked. First of all, I don't own the 100 shares in this account, so I'm not willing to do that. If I had the 100 shares, then yes, then I'm going to do the covered call on the Qs, which I do have in another retirement account. But on this one, I just want to minimize my downside to the other side and stay neutral. So I am literally planning, again, we had a 370 on this, yeah. No, which one did we sell? Here, let's see. We sold a 429. So that's something you got to look at here. You're going up here. So yeah, you got quite a bit of room actually here to work with. And I think that's a very important thing, to give yourself room. The market doesn't crash up. Now it does melt up quite a bit, but it does not crash up like COVID unless we have something like the C word again that really just makes it go crazy. And again, you have to be a decision maker in these trades on how you're going to do them. And again, if you don't think 429 is far enough out for you, you know, maybe you're going out to that 90. I thought that was pretty far out there, to be honest with you. Maybe you want to go even further out and you just want to make a couple of bucks. There's nothing wrong with this because you're going to get about $10, but you're risking $500. Yeah, you're going to get $10 and you're risking $500 basically. I don't love that trade. I'm waiting for a green day. If I'm selling calls, I'm waiting on a green day to get up there. That way I'm going to collect more for those credits. With that being said, guys, I hope this helps somebody be able to understand how you can profit off of the market going down and up. There's definitely two sides to every single market. I think that's something very important that not a lot of people look at. No matter where the market's at, you can make money. Just remember that. Everybody in this, if you are still here, I think you are in the right place. You are already researching these things. You can trade a lot of these. UVXY was one that we looked at an old video. And this is one where you can also make money while the market's going down. So, as you can see, it's done nothing but go down. You want the VIX to be down. There's nothing wrong with that. And today, what did it do? It popped up. It was up almost 6% at one point today. Well, all you would have had to do is go in here and sell that exact same trade that we made just on the other one. I would go 10 days out. I'm going to sell a call. And you know, you can get up to a $10, $11 out here. You can see your chances of profit here are really good. And then just buy back the other one. Or actually, you can probably come out here. But again, always remember how much money you're collecting and how much money you have to put up in collateral. That's a key point in when you're selling for premium. Always know what you're doing. Always know what you're looking at. And know where the VIX is. So on this one, you know, Robinhood doesn't really show the VIX, and I don't know why. But me, I always have this. And you guys see when the market got up there, I took a trade on it. When the market came back down, I was taken my trade off instantly because it was easy money. And again, everybody says that easy money. My biggest thing is if it makes dollars, it makes sense without adding extra risk. With that being said, thank you guys all for watching this video, and I look forward to seeing you in the next one.